The global polymer industry moves millions of tons of material across oceans every single day. It's built on massive, unyielding physical infrastructure. But driving that physical weight is an invisible, highly volatile network of numbers. Global prices shift constantly. Over a 24-hour period, a micro-fluctuation halfway across the world can dictate whether a local manufacturer survives the month. This flowchart tracks the movement of feedstock. These are the raw chemical building blocks, like naphtha and propylene, derived from crude oil, that dictate the core costs of plastics. When these feedstock prices fluctuate, regional discrepancies emerge. For a manufacturer, catching a localized dip in propylene can mean the difference between a healthy margin and a catastrophic loss. Mastering the physical supply chain requires mastering the daily chaos of global market data first. To understand the sheer volume of that daily chaos, look at a single snapshot in time, August 20th, 2026. This dashboard captures the frantic pace of the market. On this day, naphtha in Japan bumps up $15 to $8.15, while propylene in the US climbs to 42.4 cents. Look at how ethylene behaves at the exact same time. The US market drops down to 25.17, while Asian markets see a surge, jumping up $40 a ton. Decision makers have to process these regional trends while simultaneously translating cents per pound, euros per metric ton, and US dollars. Downstream chemicals move just as erratically. Styrene shifted across Europe and China, PTA dropped by $10, and MEG rose by $10. Attempting to manually track, translate, and synthesize all these opposing metrics across global time zones is a losing battle against the clock. The only way to survive the relentless market noise is to organize it into a unified, highly actionable system. Polymer Bazaar operates as a central intelligence engine that aggregates this global data based on three core pillars: price, prediction, and profit. The prediction phase involves extracting daily micro-shifts from the noise and building forecasting models for where prices will move next. This chart tracks specific regional inversions from our August 20th data. When Chinese PTA drops $10 and MEG rises $10, plotting their trajectory exposes upcoming supply bottlenecks. Zooming out reveals stable markets, like European propylene, registering exactly zero change for the day. This flatline provides a critical baseline to judge the severity of the volatility happening in Asia and the US. By identifying these patterns, manufacturers adjust their procurement strategies and lock in favorable contracts before a price shock actually hits their factory floor, preserving their margin. Identifying these shifts is the first step. For that information to matter, it has to reach the buyer before the market price moves again. In the commodity space, a profitable window doesn't wait for a weekly recap email. Decisions are executed in minutes. To bypass slow reporting cycles, industry professionals turn to tools like the Polymer Bazaar AI-powered WhatsApp chatbot, accessible directly at +91 93745 24365. A buyer texts the bot and instantly pulls localized, targeted feedstock prices directly to their device, no matter where they are in the world. Retrieving a precise data point in seconds, like confirming that US styrene has climbed to 61 cents, allows for immediate, confident trade execution. This technology-assisted speed strips away the guesswork, directly protecting and expanding a company's bottom-line profitability. In an industry defined by volatility, success depends on the speed of information. Having the right price first is what allows a manufacturer to capture the profit.